Hey everyone, sorry about that. I pull the old mute trick on us. Well,
Spencer mute
I
trick.
pull the old mute trick.
I don't
Sorry
know if you've
about
ever
that.
done that before. Stop.
I think I did.
Has Spencer ever done that before?
I think I have.
Joel does it.
I think I have. Yeah, exactly. Those brownies. That's right, Stock Jock.
Joel does it like once a week, but I
Those
don't think
brownies. All
Spencer's
right,
ever done that before.
I've been talking.
Again, what do you want to do?
No, I've been talking for 3 minutes for myself, but that's okay. I'm going to do the whole thing again.
Well, Joel heard you.
Well, yeah, Joel heard me. That's right.
Who said no audio first?
No, I was too busy looking at.
There was no audio in Australia. That's
yeah. All right. Anyway, what I was saying, but before I was alerted to the fact that I was on mute the whole time, was I have procured a discount code to the Benzinga FinTech Awards, which is coming up now on May 15th and 16th, 2-day event this year in New York City. If you're going to be in the area in that time, check out bzawards.com. If you enter the promo code PMP, as in PreMarket Prep, PMP VIP, that gets you $200 off an early bird ticket. So you can get a ticket now for $297 until April 27th with that promo code PMP VIP. That's again for the Benzinga FinTech Awards coming up May 15th and 16th in New York City. I figure we should probably, after we do levels, we'll start off with like the crude Trump talk, and then we'll do some earnings. But Joel, what's happening this morning?
Okay, S&Ps have had a decent range, up $1.75 after that seesaw session yesterday. I'll give you a couple levels here. Yesterday's low, 81.50. Couldn't quite get there this morning, 82.75. So there's your big level on the downside. On the upside, 98.25 is your pre-market high. Intraday high from yesterday, 03.50. Your Globex high from Thursday, 13.75. So we look a little bit range bound today. Crude, we'll let Spencer give you the news on that in a second. That's down 46 cents at 67.87. Gold in the red by 520 at 13.43.60. Silver in the red by a dime at 17.13. And don't look now, but Bitcoin up $300. I'm talking the futures here. Trading at 85.50. And I just noticed this quiet consolidation and support at 8,000. And now we're up 85.90. Let's see if I can get.
Are you getting in there?
No, I haven't been. I haven't been paying much attention to it. I used to get up in the morning and check it, but no, I haven't. But it's
maybe
building
this
a base
is a sleepy
here.
rally where everybody gets their losses back.
Yes. Yeah, it's going to 20,000. Get your order in at 19,900.
19,900 to sell.
All right. Spencer, why is crude down this morning?
We got the old Trump tweet trick at just before 7 a.m. We got a tweet from Trump about OPEC. I'm going to do my best dramatic reading of this tweet. So, and I've been practicing for the past 10 minutes. So here we go. Looks like OPEC is at it again with record amounts of oil all over the place, including the fully loaded ships at sea. Oil prices are artificially very high. No good and will not be accepted.
No good and will not be accepted. That is what he said in the tweet. No good and will not be accepted.
I'm just reading it.
That's what you know what? This Twitter account is so powerful, man. You know, say what you want about the tweets, but wow, you know, you look at crude here this morning and it got hit. It got hit, Joel. Tell us about the action.
Do you want to hear my theory?
Sure.
I think Trump is somehow stealing my levels. And I had a 3-star here at 68.63. That was a daily pivot.
You think Trump watches the show?
He not only watches the show, but I think that he somehow has a spy in my basement and in my home when I do my levels, because it went 3 cents above that. He got filled, and then boom, we fell out. Now we're in a dangerous area in crude. The low is set 67.61. We are 30 cents off that, but there's a lot of air in here down to the middle 66 handle. That's where Wednesday's low was, but I don't think we're going to get there today on a tweet. But no, that's what's moving the crude oil market. And
does he just not like me? Because he's always talking against the sectors that I'm in. I'm obviously long lots of oil, so not happy about that. Before, it's the drug stocks. I have lots of drugs in my portfolio, and he keeps talking about drug pricing caps back in the day. Is it just me? Does he just not like me? Is it because I'm Canadian? Why is he always picking on my portfolio?
That's it. It's because you're Canadian, Dennis. That's exactly it.
Anyways, racist against Canadians is that Trump guy. Anyways, no, strike that from the record. But talk crude here, Joel. So we are, we have got the pullback here. What do you think?
It's hard.
Now?
It's hard to like. I mean, the tweet, getting rid of that. It's really hard to find, like, if you wanted to go long here and you wanted to fade, the president, you can lean on that low at 67.61. That's your daily low. But underneath that, okay, if you're looking for cover, you have Wednesday's low way down at 66.54. So, it's not going to go straight down a buck to that area today. So, if you're trying to scalp and you're leaning on this 67.61 low, just be aware that there's nowhere to hide under that. Coming back on the upside, if you're a crude trader here, 68.13 is mid-range, and the close from yesterday, 68.33. So it's just hard. It's hard to find support in it. But we got some big earnings reports here. And Dennis, you got to be happy. You're not shorting GE. You're just going to buy it all the way up to 15, right?
You want me to keep buying GE? You want me to add more GE? No. It's not happening. Not chasing the move. I know it actually, you know what? It looked good into the report. It was running up a little bit ahead of the report. It was a little bit up last night ahead of the report. Now we get the report and we're trading. Spencer, give us the report.
16 cents versus a 12-cent estimate on the Q1 EPS. Sales 28.7 versus $27.5 billion. So they're beating on both those estimates there. They also reaffirmed the outlook for the fiscal year. So GE looking good. I'm still in the red, but looking good.
Hey, but you're almost green. Where'd you buy it?
Cost basis is somewhere around like 1570-ish.
Well, it's a hell of a lot better than my cost basis, which I think is around 30.
What are you gonna do?
So I'm gonna actually write this one off probably sometime this year. The rest of it, I got half of it gone, and I'll probably sell the rest of it eventually too. Just a company that can't get it going. Are you holding on? So you're forever in this, or are you thinking you get back to even? You might get out if you get back to even.
No. I'll give it at least. I'll give it another year or so at least. So
seeing if it's a real
so I can lock in those lower tax gains. No, I don't know.
I mean, it's a good pop. Everybody who bought at 13 and at 12.90, we were talking about that for a long time, was forming a hard base. And, now you're being fully rewarded here. I just look at all those highs of 15 and change, though, in February and March, multiple times, got up over 15, snuck her head, kept coming back down. I got to think that's going to come to roost here today, too, potentially. I think you get near that 15 handle. I think you might find sellers, people happy, like Spencer Israel, to get their mony back.
1485. That's your pre-market high. Slinging a lot of volume here. On the daily charts, let's see what you have up here, around $15. Actually, it's a little bit of a gappy area, Dennis. You got a potential gap to fill. Where is that gap at here? I don't know what the news. You have a gap today between 1474 and 1496. That day the close was 1510. I mean, you got to imagine all the short-term players in here are going to, if this thing closes over 15, I'll be really shocked. Spencer, pull up a monthly chart of this and look at this. Have you ever seen a stock be down 14 out of 15 months? I mean, look at that. In the one outlier.
Consistent.
One outlier when it was up 9 cents or 11 cents back in February of 2017. So when this has a month with a green candle, I'm adding it to my portfolio.
Well, you know what? That's probably going to be this month, is it not? I mean, where has it got to go to? Where did it close the month of March?
It closed at 1348.
Oh, well, jury's still out on that because you got 2 weeks for it to come out with a bad headline. Not even. You got a week and a half. So 14. So you're almost up 10%. So it's going to have to be a disaster, but we know what's happened before. What just happened with the futures? Now we just went red.
Dennis, you're starting to be like me here. You're
we fell 2 points.
Yeah, we fell 2 points. But no, there's nothing. We're just hanging out around unchanged. Dennis, out of the Google chat from BZ Tokyo, he thinks it's a difficult question. MSCC, the takeout price is $68.78 if the deal closes. Trading at $62.50 now. Expected closes in June.
What are you talking about? What stock?
MSCC. MSCC.
Okay, because Joel took us on a hell of a tangent here. So where are we going? MSCC? I know nothing really about micro semi. I've traded a couple times, but not following the story. So there's news here this morning?
Well, we'll read you his question. The question is the takeout price. So it's currently, being taken out. The takeout price is $68.78. Okay.
Yeah.
Is what they said. Right now, it's actually trading at 65.
Yeah.
Right now.
Yeah, it's up $3 in the close.
Right. The expected close is in June. So he's asking why it wouldn't be a nice idea to park some cash in this stock since the takeout price is currently
Who's
higher.
buying them?
Let me see real fast.
It's a microchip.
Since the takeout price is higher than what it's trading at right now, they're
being taken out. CHP.
Yes, MCHP, correct.
Okay, so you got any trust issues here to a certain extent. I don't know if that's going to be an issue. I mean, I'm not following the story close enough to know how much outside risk is there. I can just tell you when something, as of yesterday was 6 points off its takeout price, there's risk to the deal. Now, obviously, something's been said today, or somebody has done something. And again, I'm not following the fundamental story on this, but somebody has said something because it's up 5%. So, obviously, they're thinking, more likely for the deal to actually go through here now. But when you have these slam dunk deals, stock will trade 10 or 15 cents off the takeout price. On the deals that have risk, they trade $3-4 or even more from the takeout price. So that's what you got to consider is when you're seeing something off $5-6, it's not always just free money. It's a matter of people think that the deal might not go through. So today they think the deal might go through a lot more than they did yesterday because the stock is trading up $3. So, if you believe that the deal is going through, and it is, and again, I'm not following the fundamental story. I'm just going from what you just said. If the takeout price is up over $68, there's $3 on the table. But then you've got to look, if the deal doesn't go through, where's my risk? Well, stock was trading down. Well, it's come in a lot. I don't know when they announced this. Again, not following the story at all. So if it was 55 or 60 when they, started talking about this deal, there's a potential to fall back to there. So it's all risk reward. That's where the market makers come in. The risk arbs come into all this stuff, and the risk arbs take over. Once there's a deal announced, it's all risk arbs. And the risk arbs, what their job is to obviously take advantage of, the pricing inefficiencies of the deals. And if there's potential for the deal to fall apart, the risk arbs will put a pretty good discount on the price. If there's really no potential for the deal to fall apart, it goes almost up to the price. So that's how risk arbs price in the stocks. And risk arbs, again, this morning are buying the stock.
All right, great explanation there. Let's go to Thursday earnings after the close.
Well, okay. Joel, you're not leading the show anymore because you've skipped Honeywell, you've skipped Waste Management, you skipped E-Trade, you skipped Skechers. Skechers is a disaster.
E-Trade was yesterday.
Why do you want to go to Thursday after? What are you so excited about? Oh, Thursday after the close.
No,
sorry.
That's yesterday. Gee.
Oh my God.
Okay, Dennis, you're out. I'm in. Today, I'm the captain now.
He's gone. He scared him away.
He just walked off.
Scared him away.
He just walked off.
Okay. He's never done that to me before. I yell at him every show. He's never done that to me before.
I'm doing this now. All right, I'm on E-Trade. 88.
It's my bad because you want to know something? I thought Thursday after the close. I'm losing track of my days here. I've been so busy lately that I actually thought today was Thursday after the close was tonight. That was last night.
Wow, really? Well, what did I miss?
I'm really picking on you today. I'm mean today. He doesn't even know if he wants to do the show with me now. I'm sorry, Joel. I've never apologized to you for anything. I'm sorry for picking on you. That was my bad.
He's the least sorry Canadian of all time, and here we are.
I'm sorry, Joel. That was my bad.
All right.
I thought you were going to
talk
tonight
about it.
We'll
talk
zero
about it after the close.
There's nobody reporting after the close tonight. So that's what I thought you meant, and I was picking on you for that because it's Friday night. Nobody reports after the close. Anyway, so you want to go to Skechers?
Okay.
You want to go to the shoe store?
Okay, we can go to Skechers. That's fine.
It's your disaster stock. Is the Reverend still short this thing?
Yeah, good question. I don't actually.
Where's the Rev? Rev, are you listening? Because man, you were in the money this morning.
Yeah,
down $10.
Skechers Q1 EPS 77 cents is in line. Sales 1.25 versus $1.2 billion. So not bad Q1 numbers. Q2 numbers are where it's at though. EPS estimate or guidance that they gave 38 to 43 cents per share. 54 cents was the sales estimate or sales guidance for the quarter. $1.12 to $1.14 billion versus a $1.16 billion estimate. Terrible Q2 guidance for Skechers.
I'm just going to let Joel do his analysis here. He's mad at me right now, so we need to use your fantastic technical analysis because Joel is the TA guy here, and we're going to go to him right now for all his fantastic.
Oh my God!
That he gives us every single day.
Really laying on thick here. All right.
Give us some of those levels.
Well, I told you now you got a short 10,000 GE because you upset me.
I'm having a tough day today, Joel. This camera here that I just got for this is zoomed in. So I'm like, my face is right in your face. So I know that's intimidating as well to all our listeners, but I can't figure out how to unzoom the camera, how tech savvy I am.
3166. That is your low. You bumped up against that level in the morning. I can tell you it's a better place to cover short than it is. I mean, if you really want to try a long here, you have gotten a little bump off that. You're trading at 32.20. I have to go to the monthlies here. And I mean, if you really want to hold out for a lower target, you're
$30.
Yeah, 30.41 was your low in November. If in fact we do go into a rally mode, highest level we've been at, and that was right after the 4 a.m. open, 33.55. So earlier parameters. Dennis, did you hit any finish line or did you
it would have been a good call.
Yeah.
No, I actually tried to hit Foot Locker. I tried to hit Nike. It was just nothing there really. So both are trading slightly down this morning. Sympathy moves again, like I said, haven't been working as well as they have in the past. But one thing I want to say here for everybody who's coming here and buying Skechers at 32.30 or 33 or 34 or 35 last night, thinking, well, this is just too much. It seems like this earnings season, too much is kind of the theme. Look at that Philip Morris chart from yesterday. All shareholder profits up in smoke for 2018. Not even 2018. All Philip Morris shareholder profits from 2017 are up in smoke as well. And if you thought PM was bottoming, and you thought, okay, well, how low can it go? It's PM. It's conservative. It's got a nice dividend. When it was trading down 5 points in the pre-market or six points in the pre-market at 95, then it went through 90. Then it went through 85. This thing went all the way down to $83.50 yesterday. So it seems like it's not the type of market to be calling a bottom in or calling a top. And American Express, the exact opposite. And I got stuck. I thought, maybe $100, it's going to stall there. I tried to short it. No, it's going straight up through there. Even Twitter yesterday, which obviously was it yesterday, the big move in Twitter, or 2 days ago when it had the upgrade and just kept blasting off through 30. It seems like when the ball gets rolling right now, it keeps rolling in that direction. So it's a matter, sometimes it's wishy-washy off the bat, like with the banks, and they can reverse. But when it gets going in the direction it wants to go, it continues to go. So you know what? I think Skechers could actually see $30 here today. Not that I'm coming here and shorting at 10 points down, but I just think after watching Philip Morris yesterday, there's more people probably to wash out here even.
All right, let's see what's doing. It's trading down another dime in the pre-market. Wow, yesterday's low at 83.50. You did bounce off that by $2. So we'll see. See if we get down there again. That match? No, that doesn't match. That's actually below 83.27. That was your low in November of 2015. But the fact that you got the $2 bounce off that low, I don't know. Buyers, we'll be stepping in ahead there. Not sure we'll see that 83.50. If you're trying this for a swing trade, boom, 83.50 long side, you have to hit the exit button.
It's so you look at this and you're like, man, there's got to be some value here somewhere. And I agree, but it just seems like the disasters keep getting worse. And, even with the food stocks there, we had a 2-day rally there for Kraft Heinz. That chart looks like hell again. I put in my portfolio, investment portfolio, thinking, okay, I think, might be putting the bottom. It looks like it's going to take it out. So it doesn't even look good too. The stocks that are out of favor continue to get more out of favor. Stocks that are in favor continue to be in favor. I guess that's been the theme for the last couple of years. It really seems to be the theme here in the earnings season as well, though. I mean, obviously buying the hell out of the Netflix earnings, selling the hell out of the IBM ones, to, a pretty hard level. Philip Morris getting annihilated yesterday. Procter & Gamble getting murdered yesterday. I was, saying I would love this to come down to $68. I think it could happen. I think you could see Procter & Gamble at $68 here again. And that's where I bought it the first time around. And I will take another stab at it if it gets all the way down to 68. I'm not sure, obviously not going to get there for a bet. It's Procter & Gamble is going to move slower, but you got the triple downgrade, analysts chasing price on it here this morning. You got DB coming out downgrading, Bank of America downgrading it, Argus downgrading it. I don't know look at the Procter & Gamble chart. You find support, Joel. You're good at this.
Oh, the Procter & Gamble?
Yeah, go to PG. For those who, are bottom fishing in PG, there's not that much in there.
Boom. 73.95. That was your low in November of 2015. So that could be a potential target. And then after that, 71.21. And I know you bought this on that August swoon day back in 2015. Was it Europe? What was going on when we ended?
Oh, it was a flash crash. There was during the flash crash, I had an order out there to buy it, and I actually got filled. And believe me, I actually on that order, I got filled like 68. I went to like 65, like in seconds.
Very good.
And then it bounced back, and the next day it was 72. And it kept rallying after that for 2 years, and finally I sold it up at 90. You know how I'm a contrarian investor. We know that. I trade. Basically I buy stocks when there's blood in the water, and I sell them when everybody loves them. That's the way I've always done it. And, it's worked well for me for 18 years, but you take heat, when you're a contrarian investor. You got to be able to take the heat, and you got to be able to afford to take the heat. So that's why I don't buy on margin in my investment account, trade on margin, use a lot of trading. I cut my losses short, but, in my investment portfolio, I trade completely different. I'm an investor there. So I'm buying when I think there's value. So when price is low enough that I think there's actually value there.
I nibbled on some KHC too, Dennis, and
you bought it too. I think it's a bad one.
Yeah, so now you know.
I think it's gonna be good long term though. So it's in the long term investment portfolio, but it looks like it's ready to take it out.
I know you really frown on this, but I was almost thinking, because this is a long term hold. I was almost thinking of buying like a 55 put or something real long term. Yeah, that's what I was thinking.
What would that cost though?
I don't know.
The problem is that eats your dividend up. So, you buy the 55 put and you're basically throwing away your dividend because it's probably going to cost you 4% for that protection. It's tough gig. I mean, I've bought protection before, but especially with the VIX somewhat elevated still from where it is, I think in the long run, you're basically buying insurance, and the insurance company's there to make money. I always think there's more money in writing options, especially after listening to Nick Shaheen for the last 3 years. I always think there's more money in writing options than there is in buying options.
Then how about this? How about I sell a leap call?
There's a strategy and enhance the yield. Now you're thinking.
Yeah. And maybe
now you're thinking. And I used to do that stuff too. When you really go into a bull run, you get called away on a lot of your stocks. But I tell you, there's a way that's a good way to enhance the yield. When you buy these dividend stocks that are paying 4 or 5% and write some, upside calls on these things, you enhance the yield nicely.
Yeah.
So there's a strategy in there.
And you also could, you could take that money and buy the put that you sold the call with.
Well, you could do that too. And then you're just, not paying anything out. I just like selling the call though, because if you're going to buy the call and sell the put, you might as well just, you're just basically, creating mimicking a stock transaction, an actual stock position.
Right.
So it depends. If you're not doing the same strike, then it gets interesting. But if you're doing it the same strike, you got the put call parity stuff going on there. But I don't know. I've always just been a fan of just not rating or not buying options, because when I first started trading options, I don't trade options very much anymore. I pretty much moved purely to equities, but I first started back like 17, 18 years ago, and I would write some options, but I was mainly buying options. You learn the hard way. You usually lose on most of those option buys. So that's why I started leaning towards selling options. And I did a lot of covered call writing back in the day, but then we went in this huge bull run and I lost a lot of my portfolio. And I was like, oh man, I'm taking on some risk when you're writing covered calls and you're not getting the full rewards. So I pretty much just buy the stocks.
What was the one that made you stop writing the calls? What got taught?
Well, I got called away on a whole bunch of stuff. Like I had eBay. I had a lot of these stocks really cheap. So during the financial crisis, some of these stocks, that's silly. And I bought a lot of stocks during the financial crisis. I had a lot of cash and I was making a lot of money trading back then too. So as I was making money trading, I was buying stocks. Well, you know me, I was like, I can enhance the yield. And I remember buying like eBay at $11 and selling the 15 call. So here I am. I was getting like $1 for the call. So really I was getting in eBay at $10 and thinking if it goes up, I'm making 50% on my money. Well, we know what happened. All those things just blasted off in the next couple of years. And I was writing like longer term options. And I got called away on like a lot of stocks on my eBay. So I got called away at 15 and stock was like $23. So you left like 8 more points on the table. So I made 50% on the position, which is nice. I left so much money on the table. I was like, oh, I only got that extra $1 and I left 7 on the table. So you start adding that up. And, you know, it was just such a wicked bull run afterwards. So like stocks just, you know, flew. We know after that 666 S&P low, we just kept blasting off on everything. I mean, Caterpillar was down at $35 then. You know, there was every bank in the whole world. GE was down to what, $5 then. Bank America was down at $3. I bought a lot of these stocks, but I got called away on a lot of them too. And I wish I would. The ones I didn't write, I still have some of those in my portfolio, like the MasterCard, the HRS. Those things are just monsters in my portfolio. So if I still had all those stocks that I wrote calls on in my portfolio would have been worth a hell of a lot more. I remember the Qs. I bought a pile of Qs down there, and I wrote on like 3/4 of them, and I got called away on the Qs at like 60. And, you know, look at where the Qs are now. Where are they? They're 164. So I got called away on all that stuff. And yes, maybe I should have just came in and rebought it. But at the time, you don't know. The stock market had really went up, and you think you're going to get a chance to get them back. I never got a lot of them back. So that's the downside with writing covered calls, is that you're still taking on some market risk and you're not getting the full reward. So there's always, you know, it's not just free money, but, you know, it's a way to enhance the yield. If you think we're going to a sideways market, there's nothing better than writing covered calls.
Correct. The other thing, I was a little bummed here on the Kraft Heinz because you got the Pinnacle Food news. And, you know, I thought that was good for the sector, but it's not really moving at Pinnacle Foods. Give us the news on that, Spencer.
Wait, what is their ticker again? I never.
PF.
Yeah.
PF. I never.
They changed it, Spencer. We'll give it. It used to be like PFGC, wasn't it, or something? Pinnacle Foods Group or PF. Oh, that's Performance Food Group. So maybe that was a stock. I don't know. I thought Pinnacle Foods was something else. I thought they changed it. But anyways, I digress.
We have a dramatically reduced stake from Jana Partners. This is from their 13D out yesterday. I'm sorry, increased. I said reduced. I meant increased stake by Jana Partners. Yesterday after the bell on their 13D, that Jana had 1.42 million shares. At the end of last quarter, or sorry, that's what they had. They now have 10.83 million shares, from 1.4 million to 10.83 million shares. That comes out to about a 9% stake in Pinnacle Foods.
I shorted the pop on this. I might regret it, but I just look at this and think, holy cow. And I'm kicking myself because it popped to 61.75 and it went bid up there pretty heavy. And I'm like, I tried to hit it as fast as I could, but I had to go get locates. I had to find the locate and stuff. And took me a couple seconds, and then boom, it's back at 60. I'm like kicking myself. Anyway, so I did get a short off, not at the 61.75, a little bit lower price, but I'm in the money a little bit here where it's trading right now. I just think like, holy cow, everybody who's been in this stock, all of a sudden you're getting a windfall because Jana's going to push for a sale. How do you know? Like Conagra was interested at one time. There has been interested buyers. So yes, you could see a sale, but when stock pops up 10% on the potential for a sale, I just think if I'm long it, it's time to ring in the register. I actually tried it from the short side. It's not, I thought it might come in a little quicker than it is, which makes me, you know, it's somewhat hesitant on, you know, following, you know, holding on to this for a long period of time. I really wanted to see it come off more. It is off from the 61.75 high, but kind of finding a home in the 59 area. So it looks like they want to at least hold the 59s, and that's making me think I should cover my short. It was a shorter term trade. Longer term though, if I'm in this, what do you think, Joel? Are you in 4 or 5?
I think it's important right
off
here.
A rumor?
I don't.
It's not even a rumor.
You know me. I mean, you know, the pops off these kind of things. You know, if I was long, I'd immediately. I mean, I probably would have sold.
I'd be gone.
Yeah,
I was long. I would have sold at 58 on the way up.
Yeah, exactly. Pre-market high 62. I'd like to see it get under 59 and stay under 59, Dennis, because you've come off that level, that 62. And 59 is just held up in a lot of different brackets here. 59, 15, 59, 30. So when that 59 buyer goes away, then it's got room to go. As long as it's holding above 59, I'm a little bit leery of this one. It's got to get under 59 for you to get a good windfall on this one.
Jump over just to a couple of stocks that report earnings that we missed. Honeywell reported this morning. It's trading up a couple of bucks. Always seems like Honeywell does. And you look back to, that original deal back in 2000 when GE was going to buy Honeywell. And obviously antitrust came in and they killed the deal. Just think about, how much money and how much better Honeywell has done since then and where GE is. GE has been absolutely annihilated really since then. And Honeywell's been straight up. So I guess, that would have been a great deal for GE if they could have got Honeywell back then at what we thought was an inflated price. And when they killed that deal, Honeywell got the beats. That was the buying opportunity of all time for Honeywell because it's been straight up ever since. Spencer, what are the numbers?
Q1 EPS $1.95 versus $1.91. Sales $10.39 versus $10 billion. They're also raising their guidance for the fiscal year. EPS guidance got raised by about 10 cents on the low end of the range, and the sales guidance got increased by about $1 billion.
What do you think here, Joel?
Well, you got a straight print at 152 even, 1,500 shares traded on that bracket. Boom, boom. I put more emphasis here on 150, 150. You got it. That was the high after that small print. And also at 150, 150. There's really nothing there in the on the daily chart. So if you're shorting it at 150, 150, just be aware 152.77. That was your high of March 21st. So there's not a lot in there. Don't really have a great feeling on this chart here. Holding 150, a psych level after that. Yesterday's high was 149.95. So there's a gap fill not too far away if you're afraid to buy it because of the gap. 149.95 fills the gap.
Edge Seeker asking about imbalances a minute before we get Alan Brochstein. There's a couple of note. GE, obviously significant buy imbalance. It's going to grow like crazy. 453,000 to buy, but the stock up 90 cents. That's going to be in the millions by the time the stock opens, if it holds on to these gains, which it looks like it wants to do. Jumping over just to a few other ones. Philip Morris, which catches a downgrade analyst chasing price here this morning at Bank of America. They're downgrading to underperform. That's not affecting the price because there's so much more stuff going on here than just some analyst chasing price. So PM actually is trading up a little bit. It's actually got a buy and balance, 68,000 shares. It's early yet though, so we'll see when the dust settles where PM goes. Alibaba 20,000 to sell. It's down $1 in the pre-market. Verizon 46,000 to sell. Pfizer 59,000 to sell. Kind of just flying through some of your Dow components, things I see of note. I don't see too much else there, really.
All right, let's take a break here and bring in our first guest of the day.
Alan Brochstein. He's the 420 investor is his product. It's on. You can find it on MarketFi on that platform. But he's great. So we'll be right back in a moment with Alan. Welcome back, everyone, to PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick on now with Alan Brochstein, the 420 investor on 420. Coincidence? I think not. Alan, how's it going today?
Hey, it's going very well. I'm in Texas, so it's not quite the same holiday as it is other places, but happy 420. I know Michigan's moving in the right direction.
Michigan is moving in the right direction. A few other states are. My home state, New Jersey, is as well. Can you give us like a broad update for those of us who don't really follow or who aren't following the specific state by state legislation?
Real quick before we do that, Alan, we were talking about the 420 and the symbolization behind it, and you put in the chat about the high school kids going out at 420 and that, but and everyone on the desk said, no, that's not true. The real reason is because that's the police designation, right? For a marijuana arrest, 420.
Well, if you're asking me, I have to say I had never heard of 420 until I started researching the industry in early 2013. And I'm pretty sure it has to do with the 420 code was the kids in high school. They call themselves the Waldos. And then that time that they met every day in San Rafael became April 20th is the annual celebration. But it's a code like on Craigslist for apartments and things. It is a code. I've never heard of it as a police code.
I had always heard of it when I was introduced to like this world. I had always heard of it as the California police code for a marijuana related arrest. But that's how I know.
I think that's a myth.
You know what? It could be. That's just what I was always told. And, I believe everything I hear.
All right. So let's go.
Update. The world is becoming 420 friendly and from the strangest places. And the last time you had me on, and I've been on your show now over 4 years. So it's been a nice dialogue, but you guys know there's ups and downs. And the last time you had me on, we were talking about, I coined the term green swan, and we were talking about the Constellation investment into canopy growth in late October. And we were just on the precipice of California legalizing, which is a landmark event, obviously. And that was on December 28th. And we were, coming off a huge rally. A week later, Jeff Sessions throws like about 10 buckets of ice water onto the whole industry and really paralyzed investment. And I'm happy to say, as we fast forward to where we are as of Friday the 13th of all days, it appears Jeff Sessions has been put back in his little box, and the industry is really excited. I'm already hearing within a week that deal flows have really picked up in the private capital markets. The public stock, my model portfolios were up 25% last week, mainly on Friday as a response. And the market's given up a little bit of gains this week, but it's an exciting time. You have the former Speaker of the House, John Boehner, on board now. All these people, and we really need to see the Republicans do this like we're seeing. But Cory Gardner inked a deal with President Trump, apparently. A lot of news flow coming out. A lot of interesting developments in the industry and capital flowing. So I'm pretty psyched these days. I'm not always.
And really what it goes is, if there's, for this industry really to catch on, take fire, so to speak, recreational use, throughout the United States. That would be, the big bonanza, correct?
Yeah, well, so look, there's a lot of things. That is one. Pharmaceutical is another. As you guys, I know you guys follow GW Pharma, and that was, expected yesterday, and that's why the stock didn't react, because it was kind of figured out early in the week when people saw the briefing documents. But this is a landmark event, and we're moving to it's been very hard to do research in the United States. GW obviously has pulled it off, but it's taken hundreds of millions of dollars and years of work for what's the first cannabis drug. But yeah, recreational, the term you use, I'm starting to use the term that I'm borrowing from one of our clients. Adult access is a big thing. Vivian Azer of Cowen & Company is really the only Wall Street analyst covering the space. She was on CNBC yesterday morning, and she talked about how the beer and other alcohol manufacturers are really running into some headwinds because people are using, especially younger people, are using alcohol less and using cannabis more. And so we have that. We have in pharmaceuticals, there's a lot of substitution going on, especially among senior citizens. Not necessarily for opioids, like a lot of people like to talk about. There is some opioid substitution potentially, but for things just like chronic knee pain and getting the same results with fewer side effects and health risks. So a lot of opportunity.
Alan, question about something that I read in the New York Times. I want to say this article was, maybe read it yesterday. I think it was the New York Times. I can't really remember, honestly. But it's all about just how easy it is to grow marijuana, and just the sheer supply of it is overwhelming. At least this article was referring to Oregon specifically. I can't speak to other states, but just the overwhelming supply just drives the price down.
Yeah. There's some truth to that. Well, first of all, people say how easy it is to grow, and that's true. I mean, I don't know how easy it is to grow necessarily. I grew once in high school. I hope nobody prosecutes me over that. Not in high school, in college, but it wasn't very good. It's not as easy as you would think to grow in large scale. But obviously, when you have a state like Oregon, which you mentioned, where there's literally an infinite number of licenses, they don't limit it at all. So that's not a great market. But there are a lot of markets like on the East Coast, where there's a more restrained number of growers, and investors are really starting to figure that one out. So over time, the smart people in the industry say it's going to be the brands that win out. It's not the barley and corn and potato growers that make all the money off of distilled alcohol. It's the brands. And so what we're seeing now, and people have been talking about this a lot recently, is the United States is moving forward. There's no doubt about that. There's been a landmark change over the last few weeks. And as we move forward, nobody has market share here. There aren't any national brands yet. There's a lot of regional brands. So it's going to be exciting, and investors should be looking for those brands, not necessarily who can grow cannabis well.
Okay, let's move on to individual stocks. GWPH, I was watching this. It had the big run up and then the halt, and then the sellers came in here. To me, I mean, we closed at 136.15 here. I'm just looking at this technically, and you can hit us with some fundamentals. To me, wow, if this takes out 130, Katie bar the door, you have three lows in that area. The gap. Give us your fundamental thoughts on GW.
So I've been following the stock since the IPO. It's as I said earlier, this is just unbelievable news. But the problem for the stock was it was the FDA advisory committee. It wasn't an FDA decision. So I shared some numbers with my clients, my subscribers earlier. I think it was March 1st, where I finally said, this is where I think GW is going to be if the drug gets approved, and what the downside risk is. And I came up with like a risk adjusted price. And I'll just share with you where I think it's going to be. 158 is where I've said I think it's going to trade. And that's close to, I think, a $5 billion market cap, maybe $4.5 billion off the top of my head. And so, I don't have a ton of confidence it's going to be precisely that number, but you have to get the FDA approval. So what happened this week, the stock ran up a lot because Tuesday morning, briefing documents went out and the stock jumped. So it's kind of buy the rumor, sell the news. But I like the stock. I don't have a very big exposure to in my model portfolios because I'm finding things I think have more upside.
What stocks do you think have more upside here? I'll jump into a couple of those.
That was a good lead in, right? I wasn't necessarily.
We're all over that.
Well, I'd rather talk about sectors. There's two things I want to make sure the listeners get, because I've never really talked about industrial hemp. So I want to talk about that. And then I want to just talk about this whole Canada-US thing. If we have time to just keep it to that before we move forward. And so industrial hemp's a really interesting thing. I don't want to get into all the details, but the main thing of interest to me is that you can extract CBD from industrial hemp. And this is a crop, unfortunately, this affects not only the things I care about, which is the CBD, but the whole industry. You have to import this stuff from China, or you can't get CBD from Canada, but this is something where we import. This is a Donald Trump issue. And this is unbelievable to me. Senate Majority Leader Mitch McConnell introduced legalization of hemp, and it's going to be a huge driver. I'll let everybody do some research on that, but this is already out of committee. Only 1 in 4 bills gets out of committee. It took like 3 days, and it's out of committee, and because he's a Senate Majority Leader, and it has bipartisan support. So I've been watching this industrial hemp CBD market for years, and it's littered with a bunch of crappy penny stocks. So I want to warn people. I don't think they're going to do very well. As a matter of fact, they're going to get crushed because you're going to see these real private companies. I know for a fact there's one of these coming public through Canada shortly, and you're going to see these real companies come into the market. There already are a few real companies. One that I like is called CV Sciences. I've had a disdain for that company in the early days, but they've come a long way. And if you take a look at CVSI, you'll see what I think is a nice chart. Number one, traders will like that. But more importantly, you'll see good fundamental growth in their business. And finally, you'll see what I think is a pretty reasonable valuation as well. With that said, I'd always like to warn, they have a small SEC lawsuit going back to those early days to an issue that actually I had discovered early on and really had bothered me back then. At this point, it's pretty trivial, and I don't think it's the settlement of this issue is not an issue. But I just want to point to another stock.
Before you go on, I just want to talk about CVSI because this had the huge run up in 2014 on the chart. I'm just looking at it here, and this is correct. I don't follow the story. It looks like it went to $200.
Yeah. It had a very thin float, Dennis, and now the float's probably 100 times larger.
All right, so it ain't ever going back there.
No, it's never.
Now, question is, you say valuation. You're trying. Does this company make money?
Well, so they're EBITDA positive. It's a small amount, but so. Technically, yes, they have positive EBITDA. I don't see a lot of that in the cannabis space, not in Canada.
Yeah.
So they have that. They have a very high level of sales that's growing quickly. They're in like major chains too. These guys, like I said, it's a pretty scammy industry. They're one of the only private companies I would even mention, and I do focus on them, so I bring them up. There are other companies. I've had mixed views on this company, Isodiol. Isodiol is an American company listed in Canada. Symbol in the U.S. is ISOLF. If you take off the F, that's the Canadian symbol. I don't have a strong opinion, but I've been watching the developments there. It's pretty interesting. And then here's a great trading stock. It's New York Stock Exchange listed. This is another very interesting deal that just took place. AOI, Alliance One International. Again, it's not one of my focus stocks, but I did pick up very early on. They bought a Canadian LP, 75% of it, and 80% of applicant. And then they have an industrial hemp company that they acquired. I think they spent $25 million. So it's not a huge part of this company. And that is in North Carolina. So that traders love this stock. It's a real New York Stock Exchange. The company's been I can't use that word. We're on radio here, but it's been terrible, right? I mean, if you look at it was trading way below book value. I did a short-term trade when the news came out and the stock went up, I don't know, from 16 to 20, and then it went to close to 30 after that. But so that's another one. But let me get to the second point, which is
sure.
So look, we've been talking about Canada for a long time, and it's been just a great market. And I'm not here to say that people should be selling their Canadian stocks or anything like that. And I'm pretty excited about the long term there, but the valuations have been a real challenge. We talked about that in December when we were talking about Canopy Growth and some of the other ones. And I think they've pulled back and they look more attractive to me, interesting here, but I think there's so much more upside in the United States. And when I think back to when I first really got excited about Canada was when Justin Trudeau got elected in 2015, October. And the stock shot up a little bit then, but they pretty much retraced a lot of that over the next few months. And well, now they're like 10 baggers or 15 baggers, some of them 25 baggers. I think that what has happened over the last week with John Boehner coming out in support with Mitch McConnell advocating for industrial hemp, and with Cory Gardner, Senator of Colorado, striking a deal with Donald Trump. And there's other things going on. Chuck Schumer's introducing legislation. With all of this, we're kind of where Canada was in 2015, in my opinion. This is going to take a long time to sort out. And a lot of people like to simplify. When's it going to be federally legal? It may never be federally legal. But the real question is, can we as investors now plow money into our private company or public company and not have to worry about waking up tomorrow and we're having our assets seized and going to jail? And I think that is now a done deal. And it's just a question of what it's going to look like and how long it's going to take. So consequently, I think a lot, if you do any of the math and you look at the valuations in the United States of the cannabis companies, compared to ones in Canada, they're extremely low. And
so which ones, if you had to buy like, 3 companies here today in the US, that you think, and I know you just talked about a couple there, but you think, they're the best, situated for growing and, and getting potentially to someone what these companies did in Canada, what would the 3 companies be?
Okay, well, so let me just do this in a fair way. So I'm not going to tell you which ones I buy today, because that's not something I really want to do. Okay. But what I like to do is turn our attention to a subset of stocks. Some of these are my clients. I just want to disclose that. So I'm not going to tell you which ones.
Yeah, okay.
Let me say there's some new companies coming as well, like MedMen. People are really talking about this. I think it may be expensive, but not yet publicly traded. They're going public through Canada. There are, on my focus list of 25 names, I'm just going to mention every name, and I'll say if they're a client or not. But these are the companies that I think people should be focused on generally. And that would be, I'm just going alphabetical order as I look at it now. There's a company called Canna Royalty. It's CRZ in Canada, but it's CNNRF in the United States. And they have pivoted somewhat. They're in their business model. Canna Royalty was kind of a portfolio manager making investments, and they've become more of an operator. They've raised a lot of capital and deployed it into California. They've bought the leading distributor there, River or RVR. They've bought access to Bang products there. They have a lot of things. They just bought something called Florical. So a lot going on with that company. It's a great California focused play. And but there's a lot more to the company, and they have stuff going on in Canada. So alphabetically, the next one would be Ianthus. And Ianthus, the symbol in the United States is ITHUF. Symbol in Canada is IAN. I'll be short on these.
What's the symbol in Canada?
IAN. So IAN. This is one of, so they're more of a multi-state operator, vertically integrated, focusing on the primary things that are Massachusetts, which is going legal on July 1st. So there's a little bit of a catalyst there. But they've bought into New York and Florida, which aren't great markets today. But these are going to be great markets with limited number of producers for a while. And Ianthus has gotten in cheap. And they are a client, by the way. The next one is Liberty Health. Liberty was kind of spun out of Afria. They were funded by Afria, and they got Afria. I'll give you the symbol. Afria Technology. The symbol is LHS in Canada, LHSIF. This stock's been under a lot of pressure. It was too expensive, in my opinion. And they were focused only on Florida. They just did an acquisition, or they just announced a pending acquisition that'll get them into Massachusetts, and they've raised some more capital. There's been a lot of reasons why that stock's gone down. I find that to be more interesting now. They are a client. The next one is MPX in Canada, MPXEF in the United States. And this one has a ton of revenue, all out of Arizona. Their focus is multi-state as well. They'll have a Massachusetts operation up and going shortly, which is really exciting. They will probably win a processing license in Ohio. But they're in multiple states. They're in Nevada as well, which is a adult use state. And they are a client, by the way. And the last one, this has been a controversial stock. We've probably, over the last 4 years that you've had me on the show, we've talked about a lot. TerraTech. And they did a reverse split in OTC land. When you do a reverse split, that's you're guilty until proven innocent, assumed to be guilty. I actually wasn't at all bothered by it, but I understand why people were. The company has California and Nevada operations. New Jersey's going legal. They have a leg up there, as does MPX, by the way. So TerraTech, TRTC, these are the ones on my focus list. I would just say there are other stocks out there that I think people should be looking at. I'm evaluating some as well.
All right. I just have one for you. I asked you about a while ago, and it got a huge pop. Leaf Buyer Technologies, LBUI, the online cannabis deal database. I heard it's the price line of pot is what it's supposed to be.
So look,
What do you think?
I think it's a real business, and I actually like their business model. And then it goes all downhill. They have a really messed up capital structure that you sometimes find in penny stocks that should be illegal, in my opinion. But basically, there is a convertible preferred that keeps a constant percentage of the shares in the hands of the owners. So they have a license to dilute, and they don't dilute themselves. I hate that. Secondarily, these guys have been excessively promotional. So sometimes I see these operators that just don't know any better, and sometimes they're crooks. I don't know what's going on here. When you look at the resumes of these guys, they don't seem like crooks, but it's a pump and dump. And someone is pumping it and dumping it, probably not management. So I don't want to. A lot of times in penny stocks, these issues are the financiers and not management. So I don't want to point fingers at management.
All right, Alan Brochstein has been on with us for the past 20 or so minutes. 420 Investor is his platform. Alan, thanks so much for the time. Have a good day.
All right, thanks for having me, guys. I look forward to an update soon.
Thanks, Alan.
All right, let's talk Apple here a little bit. We only got 2 minutes left here. Morgan Stanley is knocking that thing down tonight. I believe we've taken out yesterday.
What did Morgan do today?
Spencer?
We have a maintaining of their overweight rating and a lowering of the price target to $200.
Well, it doesn't sound too bad.
Yeah, well, we've taken out yesterday's low by a substantial margin. That was 172.66. Couple level, or I'll just give you an early level here if you want to look for a double bottom to buy off. 171.53, 171.70. Those were your lows on April 10th and 11th. But beyond that, you're looking at 170. And I kind of would like people to keep poo-pooing this thing into earnings and get a little cheap, maybe going into an earnings play.
Right, and they're also just saying to be cautious heading into earnings, which I looked it up earlier. I think they're reporting May 1st, after the bell. So, and they said to be cautious heading into that report. Was there any other ones we missed? I mean, yes, there's a lot that we missed.
We missed a lot.
There's lots that we missed. I just want to remind the listeners here that it is option expiration here today. We do have, obviously, options Friday, and that means increased volatility off the open and usually at the close as well. Imbalanced data usually doesn't mean nearly as much on a day like this because there's so much institutional action. But as of right now, it is buy imbalances across the board and big ones. That will change on all likelihood. But, right now we're looking at like Bank of America 1.9 million to buy, Pfizer 1.1 million to buy. So you got some institutions really showing their hand here that they want to buy this morning. Now there's going to be some that are going to come in offset, and obviously you're going to see some sell balances here too. GE has grown to 2.6 million to buy. But keep that in mind when you're trading here today. It is option expiration, so you can see some pretty crazy opens. That gives an opportunity to the inefficiency trader, but it's also a lot of risk. So remember, use your limit orders. Don't just be buying randomly stuff at the market here, because stuff can open, up or down quite a bit from where it closed, just depending on how these orders are coming in.
All right, and just looking at the S&Ps, shrugging off the Apple being down 85 cents, as well as Google and Microsoft in the red. We're up $1.50 and 94.50. Keeping an eye on that pre-market high, 98 and a quarter. Above that, intraday high from yesterday, 03.50. But I just got to keep an eye on the lows. The lows to me are more important. 81.50 was your low from yesterday. We hit 82.75 in the pre-market, and that's holding. So perhaps we found another area to springboard back into the 2,700 handle. Spencer, you want to take it away?
Yep, it is 9 a.m. now, so we're going to bring on a new guest. He's going to grab Joel's headset for a second here. His name is Javier Hasse. He's actually one of our writers, and he's not local, but he's in town right now, and he is basically he is our cannabis beat writer. He owns that beat for us, and he just also wrote a book on cannabis called Start Your Own Cannabis Business. I want to bring Javier in now. Javier, thanks for coming on, man.
Hi, thanks for having me.
So tell us, you took like 3 months off at the end of the year to write this book, right?
Yes.
What exactly? Explain the book, what it's about.
So honestly, I got a call from Entrepreneur Media. They're the publishers of Entrepreneur Magazine, among other. And they asked me on cannabis.
The mic's a little bit. We just can't hear him.
No,
so we're just going to fix your mic here, Javier. Sorry about this.
Here, no try now. Try now. Okay.
Yeah, you're better now.
That's great. Okay. So Entrepreneur Media asked me to write a book on how to start a cannabis business for their step-by-step series. And what I did was I picked an angle that I feel particularly important. And it's focused on financial inclusion. So this is an industry that takes pride on how inclusive it is, but we're seeing an increasing amount of investors calling for sophisticated entrepreneurs. And that would end up excluding a lot of the people who pay the price of cannabis's illegality or just, the regular people. So this is a book that compiles advice from about 75 or 80 experts and industry analysts and participants to start a business.
Right. So you're going frequently, like you're on like the conference circuit, right? Like you're going to cannabis conferences a lot, right?
Yes.
Who are the types of people that you're seeing at these conferences?
So that's very interesting. It's a very varied crowd. A lot of people in suits and ties, which when you attend for the first time is pretty surprising.
Okay.
But it seems like the new cannabis consumer and the new cannabis entrepreneur is every American, is a regular American. It is not a stereotype that we've seen repeated over and over again, It's a space that has a lot of opportunity, but also presents a lot of challenges. As you well know, cannabis is still federally illegal.
Right.
So even though states allow businesses, to start and thrive, depending on the state, of course, it's hard. It's hard. So one of my favorite topics is financing. How do you finance a cannabis business? You cannot go into a bank or, to a small business association and go, hello, Mr., Mrs., I want a loan, a small business loan, because they will ask you what kind of business you want to start. And you will say cannabis and they will go like, no way, even if it's not touching the plant. And again, that's another important thing to remember. Not every cannabis business will touch a plant. You can do consulting, you can do public relations, you can do marketing.
You can make the heat lamps.
Well, of course.
Right.
But still, it will be pretty hard to get a loan for that. So how do you get financing? Well, often people go to friends and family. The thing, again, is starting a business is real expensive. And most people do not have such affluent friends or do not want to tap their families and ask them for $500,000 or $1 million to start a business. So what you have to do, and this a former NFL player turned cannabis investor and entrepreneur called Marvin Washington, he's featured in the book, and he calls it non-traditional financing. So there's a few different options that are available. You got cannabis-focused funds, you got venture capital, you got family offices. Unfortunately, at the time, most hedge funds are not investing in the space, but they're coming slowly. There's a couple of cannabis-focused hedge funds investing as well. But it's still challenging, and I don't know. It presents a lot of difficulties.
So you, first of all, where are you from? You're from Argentina?
I'm from Argentina. I'm from the U.S.
I'm from the U.S. Okay. So and that's where you live. That's what I meant, right?
Yeah.
And is cannabis legal there?
It is not.
It is not legal there. Okay.
We got a CBD law that is pretty limited.
Okay. But you're talking to you mentioned that one former NFL player, but you've come across a rather eclectic group of celebrities and former athletes who are involved in the space, right?
Yes.
There's a lot of them. Is that fair to say? There's a lot of them.
Yeah.
Why do you think that is?
So there's a few different issues. One is it is fun. It's a fun industry,
yeah,
of course. And it's interesting, but a lot of people are committed to the cost. I mean, honestly, it's very hard to be part of the cannabis industry if you're not committed with a cost. And that does not mean necessarily that you want the freedom to smoke anywhere, but that you believe cannabis is medication and it's much needed. So for instance, why do former athletes get into the space? It's because themselves or their close friends have had, for instance, trouble with opioids. What happens, for instance, to a former NFL player or an NFL player while playing? Suddenly, and this is a story I heard again and again and again, and it's impressive. This guy is playing football professionally,
right?
NFL. He gets injured, he gets surgery, and his coach pushes for a quicker than recommended recuperation.
Right.
So what do? They give the player opiates. And I'm not saying they are inherently bad, but they're usually meant for like hospital settings, for controlled settings. So suddenly they send them home and say like, take a bunch of these pills and then go play and deal with your pain. And I mean, maybe it's effective, but it has a lot of side effects. And then quitting opiates is not easy.
Right.
So many of these players found a lot of comfort and relief in cannabis. So when they see it's legal and that a lot of people are paying that price, even with their lives, because opiates take a lot of lives a year in the US, they decide they want to get involved. And many of them invest, and the way they invest often is not so much guided by profit, but by the desire to help other people.
So what in your research for this book, what would you say is aside from with funding, which we already addressed, and being committed to the startup cost that any business has that, what is the biggest challenge that you would say is unique to starting a cannabis business, aside from aside from the fact that you can't just walk into a bank and get a loan?
Number one, compliance. I mean, it's hard. It's really hard to remain compliant, and that is one thing I often recommend people in conferences and symposiums when they say like I say like, do not save on CPAs and lawyers. It will be super expensive down the line. Remaining compliant is hard. Regulations change constantly, and there are conflicting regulations, federal level, state level, municipal level. Every district has its own quirks, its own little things, and it changes constantly. So just keeping up with regulations is hard. Complying with regulations is hard. A lot of people just don't even know how to do it. So again, my main piece of advice, if there is one thing you cannot save on, is on legal advice and accounting advice. The other big challenge is taxes. As you may know, there's a tax code called 280E that applies to federally illegal businesses like cannabis. And what that implies, to put it very simply, is that you cannot deduct most of the regular expenses that you would be able to deduct in another business. You can only deduct like the cost of the sold goods.
Okay. Yeah, sold goods.
But it's hard, and it makes it very hard to turn a profit. And even though margins may seem large, they end up not being that large. Those are probably the two largest challenges beyond funding, taxes and compliance.
Does the book address, taking companies public at all?
It does a little bit.
Okay.
I mean, but since it is a book that starts from the very beginning, conceiving an idea, putting a business plan together, if you will, pitching investors, getting the word out, because you can have the best product in the world, but if you don't know, like people don't know about it, I mean, you won't sell it.
Right.
So it goes into who's doing public relations, into who's doing marketing in the space, how to scale a business, what are the unique challenges. At a certain point, you grow to a size that you will need, for instance, a COO. You won't be able to manage operations on your own. It, of course, goes into developing partnerships, into how to, create the company. And toward the end, it does go a little bit into going public, but that should be like a whole other book. As you all know, taking a company public is pretty hard. And I believe, and this is a personal opinion, it has to be done the right way, especially in an industry like cannabis, which is under a lot of scrutiny. So I would not rush into that particular topic. I would write a whole separate book about going public, how to do it, when to do it, why to do it, or why not to do it.
All right. We've been on the line with Javier Hasse. He's just written a book called Start Your Own Cannabis Business, Your Step-by-Step Guide to the Marijuana Industry in conjunction with Entrepreneur. Book available as of Tuesday, correct? And in paperback?
Last Tuesday, I think.
Right. As of last Tuesday. Yep. All right. So it's on the Amazon store right now. You can grab it there. Javier, thank you so much for the time this morning, and good job with the book. And I started reading it a little bit. Only had time for a couple pages last night, but I'm going to take some more up over the weekend. And
enjoy it.
We'll see if I'm inspired to quit my job on Monday and start my own cannabis business.
Well, you'll enjoy the anecdotal value of it for sure, at least.
All right. Good. Thanks a lot, Javier.
Thank you.
All right. That's about it for the show. I'm going to wrap us up looking at the S&Ps. 26.93.75 is where we're going to wrap today's show at. Wouldn't you know it? And crude. Oh, man. Do I want to look at crude still? Okay. Well, we're coming back a little bit there in crude. 68.05 is where we're at right now in the crude futures. But that's our show for the day, folks, and for the week. Thanks to everyone for stopping by. If you want to catch any part of our show again, you can do so on our podcast, on iTunes, SoundCloud, and Stitcher, or go to youtube.com, youtube.com/Benzinga TV, and rewatch the show as it aired there. Thanks to our guests this morning, Javier Hasse and Alan Brochstein. Thanks to all of you in our chat. Hope you all have a good weekend. We will see you folks on Monday. That's all.